ARM has put out a new report looking at the global economy and also focusing in particular on Nigeria, talking about a rocky start to the new year, 2024. Yes, there it is, the rocky road, not rocky start, rocky road to resilience. A bit of a alliteration there with the R's. Joining us to discuss, Oyinkansola Aregbesola, who's an investment research analyst with ARM. Thank you so much for joining us.
Thank you
so,
for having me.
Your report, very extensive. We love looking at these reports. You started, of course, with geopolitical situation, saying that there's some risk with the U.S. elections. What's the risk behind that your report pointed out?
All right, thank you. So for the U.S., we've seen that there's an issue of high debt, rising. The possibility of fiscal expansion, as well as the dysfunctional U.S. Congress. That has actually, so it's basically it's basically like a risk, to the entire financial market system. Being the U.S. being like a very global market, right? So that's so that's the reason why we're saying there are concerns around the U.S. election due to their high debt levels, and also there's also the case of high interest rates staying for longer, and which might affect the financial markets in the U.S.
Okay, now you make a forecast on the actions of the Federal Reserve. What do you think is going to be the monetary policy direction for Jerome Powell and the Fed?
All right, so for our expectation is actually based on the FOMC members, that's the Federal Open Markets Committee. And basically looking at their language last year, they already project that the Fed would consider rate cuts in 2024, right? And although recent CPI data, that's the Consumer Price Index data that was released in December, was more like an upside, surprise to us.
Exactly.
So that inflation was 3.4%, compared to the expected 3.2%, by the market. So that could, that's like more like a risk to our outlook. But then, we should still expect some rate cuts if we should see like a downside surprise in the CPI data.
Okay, you also report, again, very vast report here. You talked about risks facing the UK, facing the EU, facing Japan, and I think China as well. I don't know if you can quickly touch on each. What are the risk factors for those nations? All
right, so for the UK, we've seen the issue of them trying to balance economic growth and, fighting inflation. And, that's, affected, growth over time in the UK. And moving on to the Euro area, for example. Now, the Euro area, there's the extended geopolitical tensions, around that area due to the Russian-Ukraine conflict that has extended, beyond, what we imagined, and it's looking as if it's not ending anytime soon. So that has affected, growth in that in that region, due to the fact that they have to divert from Russian energy. So that has, increased energy costs, in that region. Then for Japan, Japan is more like sort of under pressure to abandon its ultra loose policy.
Exactly. We
should recall that they are, they are currently dovish. Since 2016, they kept their interest rates at -0.1%. And the fact that their core inflation is basically above its 2% target for over 20 successive months now, so that has, probably brought like a pressure on them to abandon it. Although we've seen different comments from the Bank of Japan saying that, they would still maintain their dovish positions because they believe that, this inflationary pressure is actually on the cost side basis rather than on demand. But however, coming to 2024, we believe that if there's increase in wage, for example, that would, determine the monetary direction of the Bank of Japan in 2024.
Yeah, and they held rates again this morning. What about China? Is it property markets or what else?
Right. Yeah. So for China, it's basically property markets. I mean, for the GDP, China GDP is majorly on real estate.
Yep.
So it accounts for about 25 to 30%. And we've seen that market, slump over time in 2023, and it affected the consumer wallet.
Yep.
So that has also affected demand, and it contributed to slower growth in that region. So that's basically the challenge that they are facing, or they faced in 2023, and which is feeding into 2024 as well.
Thank you for that. Thank you. Very robust, drilling onto those nations. All right, let's bring things home. Let's bring things home to Nigeria. I like it when, all you asset management firms put out scenarios. So GDP for Nigeria for 2024, you have projections. I think you can walk us through that. You've got a range 2.09% to 3.2. Your base case is 2.71. So walk us through this. What is the triggers or the justification for your GDP projections for Nigeria?
Right. So for our GDP projection, the reason why we are a bit bullish now is because of our expectation of like a rebound in the oil sector. And that's based off of the fact that we are expecting increased oil production in 2024, given the government's efforts in curbing oil theft, and as well as the expectation around the Dangote refinery operation. And so moving on over to the non-oil sector, we believe that it would actually rebound, or it would improve in 2024, giving more like a recovery from the policies that was implemented in 2023.
Yeah.
And particularly in the non-oil sector, we are bullish on the services sector. We believe that the services sector will spearhead growth in that non-oil sector, and particularly for the financial service sector as well as the ICT sector.
Yeah, I figured you were going to go with telecoms. Okay, now, so that's the bullish case on that. On the inflation side, you've also got bull, bear, and base case for inflation. You put those figures up, your base case. So this is our year-on-year inflation, but we need to be looking at your projections. But okay, so I think it's about 26.75 or so. Is it for your inflation projections? What's your outlook for that?
That's 24.39% average. Okay. That's for the base case scenario. Yeah. The bull case is 23.51%, and the bear case is 25.76%.
Thank you. So what's informing that?
Right. So for our base case scenario, the expectation around the FX supply is that FX supply will improve slightly in 2024, and currency would be around 800 to 850 naira per USD, and average PMS cost of 650 naira per liter, as well as a 15 to 20% enforcement of the electricity tariff that was postponed last year, as well as increased food supply. Now, over to our bull case scenario. Our bull case scenario is based on expectation of increased FX supply and appreciation of naira to 700 to 750 naira, as well as increased food supply as well, and then no implementation of the electricity tariff. Over to the bear case scenario, we expect exchange rates to over.
It was 929 yesterday, exactly. And parallel market is 1,300 already. Yeah.
So we expect to be over 800, at the official market, and we expect food supply to worsen, as well as the full implementation of the electricity tariff in 2024.
And just for our viewers, a bull case is optimistic,
positive, very positive. And bear case is the worst case scenario. And the base case is like the normal.
It's like Goldilocks and the three bears. CBN, we're going to be getting our first monetary policy committee meeting, I think hopefully February. What's your, I guess, for monetary policy direction, what are you expecting?
Right, so for our monetary policy direction, we're still expecting the CBN to be hawkish. Okay. At least in the first half of the year, and our expectation is based on the fact that they need to their main goal is to rein in inflation, to stabilize price. So we expect the CBN to put that at the forefront when they meet in February. So we're expecting them to hike, interest rates further in first half of the year based off of that.
Yeah, we should keep interest rates elevated. Okay, we've already talked on FX, but I mean, with where things are now, about 920 something on the official market, about 13 something on the parallel market. Where do you think FX liquidity can possibly come from?
Right. Okay. So
tough question.
Exactly.
Yeah.
All right. So I mean, for FX, we actually believe we're hoping for FX to stabilize in 2024. And expectation is basically based on the fact that we are expecting some funds. I mean, about 10 billion USD from a recently concluded Afrexim loan. That's the crude back loan of $3 billion. And as well as the $7 billion from the securitization of the future N800 dividends. We also expect some respite, when it comes to the Dangote refinery operation as well. It should, help FX liquidity in 2024. So overall, based off of this, our expectation is going back to our base case scenario for FX Naira. We are projecting a 800 to 850 Naira to US dollars on the official exchange in 2024.
Well, it's January. We will see how that projection works out. We've talked a lot about insecurity in our last segment. Anthony Blinken is here. Nyesom Wike, FCT minister, is saying he's going to clamp down on kidnapping. Yesterday's front page on This Day newspaper, Nigeria's newspaper of record, was the Economist article on how kidnapping is ravaging Nigeria. So I have to ask you about the impact of insecurity on the economy. How are you guys dimensioning that?
Right. Okay, so for insecurity, of course, it's a big issue, and we've seen over time how it had affected the economy over time, especially for the FDI that's foreign direct investment. That's basically, aside FX liquidity, insecurity is another major issue why foreign direct investment has dwindled over time. And so insecurity is like a major deal when it comes to investment, when it comes to stabilizing economic growth in the country. So we believe that insecurity should be dealt with. If that is dealt with and fast, we would see improvements, significant improvements in our growth, as a country, as well as investments coming into the country.
So thanks for this very, very illustrative discussion here. Finally, so when we look at your report again, the rocky road to resilience. So to summarize, is it a cautiously optimistic report, or how would you summarize the entire thing? Okay,
so I would say we're a bit cautious, but however, we are still optimistic, especially around the potential gains in the reforms that were implemented in 2023. All right,
Oyinkansola Aregbesola, investment research analyst with ARM. Always a pleasure going through these reports to get the insights of the experts of where the economy is going. Thank you so much for joining us.
Thank you.
Appreciate your time.